Hi everyone, this is Victor here. Welcome to the Intelligent Investor channel. At the time of making this video, Facebook or Meta stock is down almost 50% from the most recent peak. As a long-term investor, you may want to know, is Meta stock a value trap or is Meta stock substantially undervalued now? And will Meta stock eventually recover? In this video, I'm going to answer these questions by covering these topics. First, Meta's 5 biggest headwinds that are affecting Meta's revenue growth. Second, is Meta stock a value trap? Third, will Meta's app business recover soon? Fourth, Meta stock valuation. You will learn about how to calculate Meta stock's intrinsic value. And fifth, will I buy Meta stock? If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a premium member. Our goal is to create the best intelligent investor community that will help all our members grow their stock portfolios to over 7 figures over time. With your support, we'll be able to stay independent, hire other outstanding analysts to cover different stocks, and create many excellent stock analysis and investing videos every week that will help you become a great investor. The link is in the video description. Take a look. Let's start. Meta is the parent company of Facebook, Instagram, WhatsApp, Messenger, and Reality Labs. Reality Labs is Meta's metaverse business that's consisting of the Meta Quest VR headset, VR games, and VR apps. Mark Zuckerberg wants to make Meta Quest the next mobile computing platform to replace the iPhone and Android phones. He wants to create an embodied internet known as the metaverse, where people can socialize and interact with each other in virtual environments through our smartphones, VR headsets, and AR glasses. At the time of making this video, Meta is facing several major headwinds that have caused the stock to drop as much as 50% from the most recent peaks. I'll go over each headwind here so you will know Meta's biggest risk. The biggest headwind is that Meta's current revenue growth is much lower than before. In the past, if you look at these financials here, you can see Facebook's revenue used to grow double digits every year. In the most recent Q1 quarter, you can see Facebook's total revenue only grew 7% year over year. 97% of Facebook's total revenue is from advertising. In comparison, in the same Q1 quarter, Meta's biggest advertising competitor, Alphabet's revenue grew 26% year over year, and Amazon's advertising business grew 25% year over year. This suggests many advertisers have shifted their ad budgets to Alphabet and Amazon in recent quarters, mainly because Apple implemented the app tracking transparency feature in 2021. Apple's app tracking option is a huge problem for Meta because it makes it much harder for advertisers to target ads to individual users and to measure ad performance accurately if iPhone and iPad users opt out of ad tracking. For example, if you download an iOS app on your iPhone or iPad, you will see this app tracking option. It asks for your permission to let the app track your activities across other companies' apps and websites for the purpose of giving you more personalized ads. In my opinion, most people would choose not to be tracked because most people value their privacy. But here is the problem. Meta's app platform relies on personal data gathered from millions of third-party apps and websites that track our activities. This is why we often see personalized ads that match our interests when we use Facebook and Instagram. If most users opt out of app tracking on the iPhones and iPads, Meta will have a huge problem tracking app performance and targeting ads for advertisers. This is why many advertisers have reduced their app budgets on Facebook and have moved their app budgets to other app platforms such as Google, Amazon, and TikTok. For example, after Apple implemented its app tracking option in 2021, Meta has estimated that it will lose about $10 billion of revenue in fiscal 2022. I talked about this in my previous Facebook stock analysis videos. Meta's biggest social media competitor is TikTok. As of now, TikTok is growing much faster than Meta. For example, if you look at the latest data here, you can see Meta's family monthly active people, which includes Facebook, Instagram, Messenger, and WhatsApp, have been growing steadily in the past quarters. Meta has 3.64 billion family monthly active people at the time of making this video. In comparison, if you look at this data here, you can see TikTok had been growing at much faster rates than Meta during the same period. TikTok has around 1.4 billion monthly active users at the time of making this video. TikTok is most well known for short form videos. It's very popular among younger users. Meta's management knows that short form video is the biggest trend now and that TikTok is the most popular platform for short form videos. This is why Meta is investing a lot in Reels now in order to compete with TikTok to capture more users and increase user engagement. In my opinion, Reels is still behind TikTok in content strategy, but Reels content it has improved a lot since it started. Another problem is that Reels is not monetizing well yet. Meta is still focused on creating better content first before monetizing it. Management said this: first, we're managing headwinds from the shift to short-form video that I just mentioned. In the near term, this is a drag on revenue because Reels monetization is less than feed or stories, but I expect that will improve over time. We have seen this type of media format transition multiple times before. This is from the most recent quarterly report. It shows TikTok is impacting Meta's user growth and user engagement. User growth and engagement are also impacted by a number of other factors, including competitive products and services such as TikTok, that have reduced some users' engagement with our products and services, as well as global and regional business, macroeconomic, and geopolitical conditions. Another headwind is Meta's Reality Labs, which is Meta's metaverse business. At the time of making this video, Meta earns about 97% of total revenue from advertising. Reality Labs is still losing billions every quarter. If you look at this here, you can see Meta's entire operating income is from family of apps. This means all of Meta's operating income is still from advertising and not from Reality Labs. Management said this explains that they will continue to use Meta's advertising business operating income to fund Reality Labs until Reality Labs becomes a profitable business. Last year, we began looking at our business as two segments, Family of Apps and Reality Labs. On the Family of Apps side, I am confident that we can return to better revenue growth rates over time and sustain high operating margins. In Reality Labs, we're making large investments to deliver the next platform that I believe will be incredibly important both for our mission and business, are comparable in value to the leading mobile platforms today. So over the next several years, our goal from a financial perspective is to generate sufficient operating income growth from Family of Apps to fund the growth of investment in Reality Labs while still growing our overall profitability. According to this article here, Meta's Metaverse project will lose significant amounts of money over the next 3 to 5 years. CEO Mark Zuckerberg told shareholders on Wednesday, many of Meta's products for an embodied internet where users will be immersed in a virtual world are not likely to be viable for 10 to 15 years, according to its board. We want to get the hardware to be as affordable as possible for everyone and make sure the digital economy grows, Zuckerberg told shareholders, Bloomberg reported. In my opinion, it will take Reality Labs at least 5 years to become profitable. This means we should expect Meta's operating income growth to be much lower than before until Reality Labs become a profitable business. For example, you can see Meta's operating margin have been decreasing consistently in the past several quarters because of Meta's large investments in Reality Labs. Mark Zuckerberg is betting on VR headsets such as the Meta Quest headset and upcoming Meta AR glasses to eventually replace the iPhone and Android phones. VR headsets and AR glasses are essential products in creating the metaverse. Meta is facing many macro headwinds that are outside of Meta's control. This is from the most recent earnings call. It explains Meta's current major macro headwinds. Other challenges are broader macro trends like the softness in e-commerce after the acceleration we saw during the pandemic. The war in Ukraine, which is a real tragedy on a humanitarian level, has also had an impact on our business. We have been blocked in Russia and we decided to stop accepting ads from Russian advertisers globally. We have also seen effects on business globally following the start of the war. There are other macro headwinds that are outside of Meta's control. For example, the ongoing Ukraine war is affecting the economy in Europe. This means many European advertisers are spending less on digital ads. Also, the COVID lockdowns in China, the ongoing supply chain issues around the world, labor shortage and high inflation are affecting Meta and many advertisers. If advertisers anticipate that the economy is slowing down, they will likely spend less on Meta ads, which will lead to lower ad revenue growth for Meta. I believe this is one of the major reasons that Meta's revenue growth has slowed down a lot in recent quarters. Of course, the opposite is true. When the global economy is growing again, advertisers will likely spend more on Meta ads. Here's the important question you may ask. Is Meta stock a value trap? According to Investopedia, value traps are investments that are trading at such low levels and present as buying opportunities for investors, but are actually misleading. A value trap is a poor investment because the reason for the low price and low multiples is the company is experiencing financial instability and has little growth potential. Even if a company has been successful in prior years, having experienced rising profits and a healthy share price, it can fall into into a situation where it's unable to generate revenue and profit growth due to shifts in competitive dynamics, a lack of new products or services, rising production and operating costs, or ineffective management. In my opinion, I believe that Meta stock is not a value trap because Meta's daily active users are still growing, but much slower than before. I will consider Meta a value trap if the company's revenue is decreasing consistently every quarter, or if the company's daily active users are decreasing every quarter. Realistically, I do not expect Meta to have double-digit revenue growth every quarter like before, because Meta's user base is much larger now. For example, at the time of making this video, Meta has 2.87 billion family daily active people and 3.64 billion monthly active people. Also, Meta's advertising business is much more mature now. However, if Meta's long-term investments in AI, machine learning, short-form videos, and reality labs pay off, then I would expect Meta's revenue will have double-digit revenue growth again. Another question you may ask is, will Meta's app business recover soon? Before I answer this question, I will give you some context first. Meta's social media and app business did perform very well in the past, before TikTok became very popular and before Apple introduced its app tracking option in 2021. For example, you can see Meta had very high double-digit revenue growth rates every year over the past 10 years. But in the latest quarter, you can see Meta's revenue only grew 7% year over year. In terms of financials, you can see Meta's operating cash flow and free cash flow have been growing consistently over the past 10 years. However, when it comes to investing, we have to be forward-looking instead of backward-looking. In my opinion, I believe Meta's advertising business will eventually recover because of Meta's large investments in Reels to compete with TikTok and Meta's large investments in AI and machine learning to improve app performance, targeting, and measurement with less personal data. Again, I believe it will take Meta's reality labs business at least 5 years to become profitable. Mark Zuckerberg said this in the most recent earnings call. It explains Meta's 3 most important priorities: Reels, ads, and metaverse. I want to dive deeper on what we're seeing in 3 of our main investment priorities that I expect to drive this growth: Reels, ads, and the metaverse. So let's start with Reels. There are 2 key trends that we're seeing here. First, the increasing popularity of short-form video, and second, the advancement of AI recommendations driving more of our feeds rather than just social content. Management also said this explains how Meta will improve its ad strategy going forward to help advertisers have better ad targeting and measurement with much less data. I want to pick up on what Mark said about our ad strategy. As he described, it's focused on 3 main areas. 1. Growing video monetization, especially short-form video like Reels. 2. Evolving our ad systems to do more with less data. And 3. Investing in AI and machine learning to support our ads infrastructure. App tracking transparency (ATT) continues to be a headwind, but we're also seeing incremental headwinds from iOS 15 and other regulatory changes. Medium term, we see the opportunity to move clients more toward on-site conversions. We're seeing a lot of success in things like click-to-messaging ads, lead gen ads, and then more nascent effort in shop ads. And then longer term, we're building our ad stack to employ more machine learning and AI to be more effective at ads with less data. Over the longer run, we're also developing privacy-enhancing technologies which will help us minimize the amount of personal information we process while still allowing us to show people relevant ads and measure performance for advertisers. And we're collaborating across our industry on this and other standards that will support this next area of personalized advertising. AI and machine learning, which are crucial components of these privacy-enhancing technologies, and will drive improvements over time to our ads ranking and measurement capabilities. We're significantly increasing our investment in AI and machine learning across the companies this year, and a large portion of this is going towards ads. Here's the very important part you want to know. Meta owns a large amount of first-party data of all the users that use Facebook, Instagram, WhatsApp, and Messenger. This first-party data is essential for advertisers to use to target their ads. According to this article here, Apple also doesn't forbid companies from tracking what you do on their own platforms, collecting what's known as first-party data, and from using that data to target ads to you on those same platforms. This means Meta can still track us and give us personalized ads using its first-party data combined with aggregated data gathered from millions of third-party apps and websites. I said this earlier, if Meta's investments in Reels, AI and machine learning and metaverse pay off, then I expect Meta will have double-digit revenue growth again. But in the short term, I expect Meta to have single-digit revenue growth. Let's calculate Meta stock's intrinsic value so we will know whether Meta stock is undervalued, fairly valued, or overvalued. I always use this intrinsic value calculator here to calculate a stock's intrinsic value. If you want this calculator, you can download it in my Patreon blog in the video description. Here are the key assumptions. First, I define Meta's intrinsic value as its future cash flows discounted to the present day. The discount rate is 11%. This is higher than the 9% cost of equity from Finbox.com. I use the higher discount rate here to be more conservative. Meta's most recent 12 months of free cash flow is $39 billion. Based on the short-term headwinds and Meta's growth strategy I talked about earlier, I believe Meta's free cash flow will grow at a compound annual growth rate CAGR between 5% and 10% over the next 5 years. To calculate the terminal value at the end of year 5, we're using both the perpetual growth and exit multiple models here. Then we take the average of both models to calculate the terminal value. Let's go over these 3 case scenarios: the worst case, normal case, and best case scenarios. Under the worst case scenario, we're using compound annual growth rate CAGR of 5% over the next 5 years. If we forecast Meta's free cash flow for the next 5 years and discount the free cash flow to the present day, Meta's intrinsic value should be around $567 billion for the entire company, or $207 per share. I'm giving this scenario a 25% probability here. Under the normal case scenario, we're using a compound annual growth rate CAGR of 7.5% over the next 5 years. If we forecast Meta's free cash flow for the next 5 years and discount the free cash flow to the present day, Meta's intrinsic value should be around $628 billion for the entire company, or $229 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we're using a compound annual growth rate CAGR of 10% over the next 5 years. If we forecast Meta's free cash flow for the next 5 years and discount the free cash flow to the present day, Meta's intrinsic value should be around $695 billion for the entire company, or $253 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, Meta's intrinsic value should be around $230 per share. This means I believe Meta's stock is undervalued by around 18% at the time of making this video. In comparison, Morningstar estimated Meta's fair value to be much higher at $384 per share. This means Meta's stock is likely substantially undervalued at the time of making this video. So will I buy Meta stock? The answer is it depends. I already have Meta stock in my gold stock portfolio here, so I will not be buying more Meta shares anytime soon. I did sell a portion of my Meta holdings in the past 2 years and made a small gain. However, if I don't have Meta stock, I will buy it for the long term because I believe Meta's advertising business will eventually recover. Based on my estimate, I believe Meta stock's intrinsic value is around $230 per share. This assumes Meta's free cash flow will grow between 5% to 10% each year over the next 5 years. I will update Meta stock's intrinsic value every quarter. If you want the latest intrinsic value update, you can download it in my Patreon blog in the video description. Now, all these are only my opinions and my analysis based on my research. They are not financial advice. There are always risks associated with investing. It's important to always invest in what you know and not speculate. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.